to have DraftKings trigger, which it did not. But our winner chicken dinner was FedEx. If you guys recall, right? We had a FedEx on, and if I take us back to, let's add more time here and go back. If you guys remember when we were looking at FedEx, we were going saying, okay, this is an old known resistance level, which was at that 275 range, right? That's what we were looking at. And we did the whole paper trade and we analyzed and did our support and resistance, all that good stuff. We were aiming for 275 and then we adjusted our stop. So I believe our entry, if I can go back to my notes here. We could probably even go back to our analyze. We got in at 261.88, if I'm not mistaken, and I can actually go back and look at the actual trade itself. So if I go FedEx and give me, and by the way, if you ever, this is a quick trick that you can use if you ever are looking for how you've traded a particular stock. If you come to your monitor tab up here, it's always going to default to the account activity and positions. This is where you have your current trades. Okay.
Yeah, we talked about this on Wednesday. Jake had showed us this spot. Yeah,
perfect.
yeah. So, but you can give the refresher to everybody.
Thing. Yeah. You sure you got to do all of this?
Kathy had some questions about when you put an order in and obviously not realizing that if it doesn't trigger in, it just disappears. So she was like, what happens with orders that gets canceled? So then Jake took us over here and kind of showed this whole screen to us. So
perfect. Okay, well then I don't need to repeat myself then. But
well, you got some new faces. You may as well just give them a little walkthrough.
A little walkthrough.
All right. Yeah, so you can give us a walkthrough.
No, I had more than that.
So not this part, not last week, but the week before, we actually put on our trade with FedEx, right? And when we were looking at it, it was actually here as one of the positions that we had here. But now if you guys can look here, we no longer have that trade on, right? The position is gone. So that means one of two things happened. We either hit our target or it hit our stop loss. Right? That's the only two possible outcomes that can happen. If it has not hit your stop loss or if it has not hit your target, then the trade is still going to be here on your monitor tab because it's an active trade. You have not closed it out yet. But with FedEx, we are no longer in the trade. That means one of two things happened. And based on the chart, right, you guys can assume that we hit our target because the stock price has been going up, right? But anyway, so if you're ever looking to see how the trade went or what happened to the trade, go to your account summary, and then at the search box here, type in whatever symbol you're looking for, and then you come down to your trade history. Now, depending on how far back you want to go, you can click on up here where it has the days to go back from. You can go back as far back as you want. I think this default here is a whole year. If you want to do like more than a year back, then you can just do the date ranges here. But I know we just did FedEx last week, so I can even do like the last 30 days and it will still give us FedEx. So here's our trade on FedEx. So we got in the trade on October 6th. You guys can see that right there. That's where we bought, right? And we bought our 10 shares at 261.88. And then remember, we said when we looked at the chart, and as the stock price was going up, so on 10/6 is when we made our trade. So let me so 10/6 would have been right here. So when we were analyzing this stock, let's pretend like this data does not exist. Come on, 10/6, 10/5. So when we analyze this trade, this is what we were looking at, right? We were looking at FedEx at, on this uptrend here, and we wanted to get in on confirmation of the what? Of the price continuing to go up. So this is the second, so this is the 6th, right? So this was the day that we looked at it and we wanted to get in only if it broke above 261.88. On this candle, on the 6th, at some point, it did get up to 261.88, because if you look at the data box up here, when I move my cursor back to the 6th, you'll see that the high did get to above 281.66. So the high for that day was 264.98. So at some point we got triggered into the trade, and now we were in 10 shares. Okay. And then every day that we met after, whatever day we met, Monday, Wednesday, we just looked at our FedEx trade, and we had our stop loss down here, if you guys remember. And as FedEx started to go up, we said, okay, we can have two targets. We can talk about taking profits and taking half off. We talked about managing the trade. We can manage the trade by either taking half off if it gets to one resistance level. Like I think we had two resistance level. We had 270 and 275. So we said, okay, if it did get to 270, we could take some profit off. That way we lock in some of those gains, and then let the other 5 ride to 275, which is exactly what we did. So we got out of 5 shares at 270, and then we moved our stop to our break even point. Our break even point was at 261.88. So when we got triggered into FedEx and it started to go up, we said, well, we don't want to give back any of our profits now that it's actually starting to go up. Let's move our stop. I think our stop initially was at 250 or 246 or something like that. And we moved our stop to right where we got in. So our new stop loss was right below, I believe, this candlestick right here. That's where we put our new stop loss, because we didn't want to give back all of our profits that at least we wanted our stop loss to be at our break even point, which is where we got into the trade. And as FedEx kept going up, we took profits on 5. And then you guys see how it had a couple of days of consolidation at the 270 level. Why do you think that is? Because 270 is a whole number, right? And it's an old resistance level. If we go back, there was some resistance level. There was some resistance right here at that 270 range before we got to the 275 as the high. So we did say, well, just in case it doesn't have that momentum to get to 275, and we saw it high basing here, we took five trades off and got out at 270. So if you guys are keeping track of the profits, now we can say, all right, we had 5 shares that we got in at 261.88, and we took profit at 270. I think it was like at 269 something, but I'm just going to say 270 for the sake of just making math. So we took 5 of them at profit at 270. So how much profit did we make with those 5 shares if we bought at 261.88 and sold at
3%?
How much?
You're muted. Ha 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 ha.
Bitch. I said I have 1.031.
I don't see it.
Kids.
Dollars.
1.031 is what I have.
Dollars.
I don't know. I wasn't for the hair of that class.
All right,
we
paid.
my ROI
We
is
paid
100%.
260. What did we get out at, Emily?
Hold on, let me write it on here so that you guys can have it.
$35, about 35.
Right, because each share, we went up $8.12 per share.
Yeah. It was about
And then we had 5 shares, right? So let's do this together as a class, because I want to make sure everybody understands how we get this, right? So our entry point, now I'm writing, oh, I'm a lefty. My leftiness is showing out today. Let me delete that. That does not look
Girl, that looks like Gandhi. What you doing?
All right, let's try this again. So our entry was 261.88.
What the hell is that? Oh, that's an E. I see.
E. There we go. So, and we did 10 shares, but then we sold. My stylus not writing properly. There we go. We sold 5 at 270. So that means we made a profit. If you take 270 and subtract that, we made $8.12 per share, but we sold 5. So multiply that by 5. We made a profit of
$40 something.
$40.60.
Right.
Yep.
And then we let the other shares ride all the way to the next, our actual profit target, which was 275. So if you guys look here, and let me go back to the other trades here, the other 5, we got taken out of the trade on the 13th, and we got taken out at 275.03. So there's the other 5 at 275.03. So the other 5, we still paid 261.88 for, but now we took profit at for the other 5,
$13.15 a
we took
share.
profit at 275.03.
Mhm.
So our profit on those 5 shares was how much?
65.75.
13, 15.
So the other 5 shares we sold at 275.03. If we subtract 261.88, that's a profit of how much per share?
$13.15.
So 13.15 times 5, our profit was $70.
65.75.
65.75. All right. So now if we add those two up, 65.75, what do we get?
106.35.
106.35 profit. So now,
That got my heart very fast. I'm a little happy with this. That was fun.
what was that number again, Bo? 175 what?
I have 106.35.
106.35. Yeah.
Okay, I'm sorry. Okay, 106.35. So let me clear all of this. So now let's do ROI percentages, right?
Ooh, I
Because
love
that's
this
what I
part.
want you guys to think. I want you guys to think about it that way. So we got in this trade on 10/6. So our trade was 10/6 was when we got in the trade, was when we got in, okay? And we got out of everything, our last day that we got out was on the 13th, where we got all of the other 5, okay? So how many days is that?
7.
So 7 days in the trade. Remember we talked about swing trading, and what do we say about swing trading? Normally, it's about what? It's about 3 to 7 days. Sometimes it can go a little bit longer. It could go 7 to 14 days. But in most cases, when you're swing trading, because all you're doing with swing trading is you're capturing that one move. You're not going from pivot to pivot, right? You just want to capture this one move here, get out, wait for it to retrace back up and catch it again, right? So with FedEx, literally all we did was catch that one move. Now, could we have still adjusted our stop loss and just kept riding it as it was going up? Yeah, we talked about that, right? But for beginners, I want you guys to just get into the mindset of having your stop, your entry, your target, take your profits, and you can always redeploy the trade again once it gives you that same setup, if once again, right? So we could have, once we saw it high base right here, like when it gave us those 3 candlesticks, we could have moved our stop loss right there and then kept riding it, where we would still be in the trade even till today. And then every day that it gives you a new high, all you do is just move your stop loss to that candle for that day, right? Because it's gone above your what? Your target. But we just chose not to do that, and we just said, let's just get out at 275 just for the point of just keeping it simple. But anyway, we got into the trade on 10/6, got out on 10/13. So that's 7 days in a trade. Now it cost us how much total? We bought 10 shares at 261. Yeah. 261.88. And that means 10 shares, we paid 2618.80, right? Because you just multiply that by 10, right? So we were 2 grand in, 2,600 in, because we bought 10 shares, right? Now we made a profit of, Bo said 106.
Correct. Yeah.
Our profit was 106.38.
35.
That's 35. Okay. So now if you take 106.35 and divide it by your cost, let's figure out what the ROI is.
2, 6, 1,
Is it 4%?
8, 0. That was 4%. Yeah, 4 point. 4.06.
So 4 point,
That's sexy.
And you divide that by 7
4.06.
days, right?
4.06%,
Which is
right?
Which
In
is-
how many days?
7.
So, and we talked about this last week, and I said, you guys might think, oh, well, $100 is not going to change my life. And, I mean, I can barely pay one month of my cell phone bill and whatnot. But I want you guys to get used to calculating your ROI and then your ROI on time, right? Because I said this last week, I said, show me where I can put $2,000 in
Holy shit.
and get $106 back in 7 days.
So if we were to do that every day, it's not, but if that had been an annual return, it would have been a 212% return on investment. What the is that?
The stock market, baby.
That just got so cool.
Yeah, so
Emily,
that's
I
the thing.
actually
But
understood that.
however, right? However, it's not always, pretty roses every single day.
Yeah.
This is why we do a couple of different trades, because for every one that you win, you're going to have a little bit of a loss. So let's look at the other one that we did get in. We did get into CRM, right? So if we now go back and look at CRM, same kind of scenario. I think they were almost identical in terms of the entry and almost the price of CRM. But I just want you guys to just picture that. How many trades, how many $2,000 trades? Now, again, depending on what capital you have to trade, everything is about position sizing. So you may not be able to do 10 trades if you don't have an account that allows you to do that. But could you have done one trade and made $10 out of $200? That's still what? It's still a 4% ROI in 7 days, whether you did 1 share, 10 shares, or 1,000 shares. To me, it's not the point. It's, how many more times you need to do this to get yourself into a position where you can start to make a living out of this.
That's so cool. So in stocks, as in life and dating, position and size matter.
Love that.
Yes, only you would put that analogy together, but yes, position sizing matters.
There you go. See?
It matters. That's the most important thing out of your whole trading is position sizing. You can't over leverage yourself. So
Right.
yeah, absolutely.
Well, otherwise your stocks will prolapse sometime.
Pretty much. So now if I go look at CRM, because that's the other trade we did have on, and if you guys go back and see on our monitor tab here, CRM is also not here. That means something happened with it. So we can go back and look at CRM, and by looking at let's clear all these drawings out. Well, this is actually where we had it drawn out. So we were looking at CRM and we were looking for a target profit. I believe, actually, we can go back to we're looking at a target profit of 284 and we got it at 256.30 is what we were looking at. If that rings a bell. So we did get triggered in. So if I go to my monitor tab and look at CRM, we did get triggered in at 255.90 on the 6th. So on the same day, we got triggered in right here. Okay. And the reason I have this line drawn here, because this was going to be our what? This is going to be our entry point if it got above this candlestick high right here. And it did. So that's how we got triggered in the trade on this particular day, right? And we were targeting this high over here as our first profit.
Okay.
We're looking at this profit target here as our first and our second. So we were saying 270 for the sake of it just being a significant whole number, right? And then 284 being that's the all-time high. And then our stop loss is going to be right over here. I believe that's where we had our stop loss. That's why I have this line here. This was our stop loss. So we got into the trade, boom. As we were inching up, whenever I get a positive day in the market and the stock price goes up, I always move my stop up to where the break-even point is, meaning I move my stop loss to where I at least paid to get in. That way I don't have any losses. If it comes back down, I'm going to be stopped out where I entered into the trade. So therefore I lose nothing, right? So as it was inching up and I saw it starting to get to that 270, which was our first target, I moved the stop loss to our entry point. Okay. But it didn't quite touch 270. And I think what happened? Well, we weren't together last week, so we would have probably talked about this on Wednesday, because this is today's candle. This is the Friday. This is Thursday, so this is Wednesday's candle. So Wednesday's candle, we would have probably had a discussion about it, and that's when I actually moved the stop loss up here to where we got in, right? But we never actually hit the first target to even get taken out, take out the first initial 5 trades. So I let it ride. And then today, actually not today, on the 15th, which was last week on Friday, if you guys can see here, we got taken out of everything because I moved my stop loss to where my entry was, right? So if you look at my CRM profit and loss here, there really isn't any losses because I actually made 85 cents because I actually got out a few cents above where we got in. So if you subtract where we bought it at the 255.90 and subtract where we got stopped at right here at 256.57, there's your 85 cents, right? So we didn't take any losses on CRM, even though it came down. It's had 4 days of it coming down. Because we moved our stop loss, right? Now, could I have still left my stop loss down here from the original entry point? Yeah, but whenever I see it run up, I always like to at least lock in my try to move my stop loss as it starts to go up. And we had some momentum driving it upwards. So I thought that it was just going to keep going up, but then again, it's not what you think. It's actually what happens, right? But I was looking at it and looking at FedEx and going, okay, we might have a similar situation where it will touch 270 and then continue ripping up. So I moved the stop loss up. But now here we are, 2 trades in, right? FedEx, CRM. What do you guys think about the process of how we've been analyzing these trades, running the numbers, figuring out our stop losses, our entry, our target, and then adjusting as we go so that we can, number one, secure some profit as the stock price is moving up, or minimize the losses even from the initial risk that we were going to take on, because we were all comfortable taking that initial risk in the first place anyway, because we did the numbers, right? And we had a good risk reward ratio. And we were all comfortable with having our stop here because of what the reward was going to be here. But I still adjusted it so that I didn't even have that loss at all, right? Because it took me out at the initial where we got in at 251, 251.88 or whatever that number was. So what do you guys think of those 2 trades? So here are the charts. This is CRM, same scenario. We were looking to get in and we got triggered in, but it didn't give us that same momentum as FedEx did.
But we could have chose to sell, couldn't we have, instead of letting it, you adjusted
Yes.
stop loss, and we could have also lowered our selling time.
Yeah, absolutely. Could I have manually, just when I saw that it was losing, it was having a little bit of a sell-off once it got to this high right here, because it did actually touch 270, like literally touched it. If you guys look at the high over here, it touched it and then sold off, right? So it didn't stay there long enough for it to even get triggered in. So could I have seen this and gone, you know what? We hit that significant hold number on this day here on the 12th. Could I have manually gone in and gotten off the trade the next day? Yeah, I could have. And then we would have had a little bit of some profit because we did get in at 250, whatever that number was, 251, 56, I think is what it was, right? So we could have at least made some profit because we got in at 255.90. So yeah, there was potential to lock in some profit, but it didn't quite trigger it. And we didn't make that adjustment like we did with FedEx when we met in class that last Wednesday, right? So we didn't have the discussion and as a group say, okay, should we move our stop up like we did with FedEx? Because with FedEx, we said in the class, yeah, let's move our stop and let's take profit at 270 and then take profit at 275. So as a class, we agreed. But because we didn't meet last week, or I wasn't with you guys last week, we didn't have that discussion, but we could have. But I want to show you guys that this is what happens with trades, right? And this is part of your daily trading management is for you to decide, okay, it's really not getting to the target that I had in mind. Should I let it stay or should I just take profit now if I'm seeing that it's losing that momentum and starting to have a little bit of a sell-off? You guys see that? So yeah, Kathy, we could have manually just taken profit on this day. And it would have been a 3-day trade. We got in on the 6th, then we had the weekend, and then Monday we would have been out of the trade. So yeah, we could have done that too.
Mhm.
But yeah, but this is what you as the individual will have to decide, right? For the most part, the reason we do the set method is because we want to automate it, and most of us are not sitting in front of the computer every single minute looking at the chart. So you want the system to do the job for you, right? You want the
Right.
computer to do the job for you. Now we could have also done a trailing stop loss where we were trailing the stop based on the ATR or something like that. But I you know, right, for the sake of just keeping it simple for you guys, we're just using the stop entry target method. But as you start to learn and start to learn more about the different entry types, order types, and stop losses, we could have trail stopped this and said, okay, trail it by, if the ATR is $7, right, per day, let's go half of that ATR and just trail it by $3. So if it ever goes down $3, take us out, right? So on this candle here, we would have been out because this candle range right here was $11. If you look at the range right here, that candle was an $11 range. So we could have said, okay, trail the stop by $3. So wherever the price is, trail it by $3. And if it goes down $3, get me out of the trade. After your initial entry and you see that it's moving up and it's losing momentum, we could have done that as well too. But because we just had the original order entry with the target here and the stop loss here, and then I moved it up to where we paid to get in, that's why we got taken out on the 15th, because it did go below that price. Makes sense? Any questions on that one?
So is that another entry, the trailing code? Is that another entry that?
The trailing stop loss is another way to exit the trade. So rather than have a set number, like, you know, our stop loss for this one here, like, for example, if we had the stop at 243, all you would
Right.
need to do is just change, it's part of your order entry. So you could go, like if we were getting back to this again and say, okay, let's just buy with stop, right? We would have our entry, whatever that entry number is. And then here you would just change this to say trailing stop loss. And then you can either have it by percentage or by dollars. So you can say, okay, trail it by $3 because the ATR is 7. If it moves half of that ATR, then get me out. So now it would look something like this.
And so
Let's see if we can confirm.
still left on the day. So it's still left on the day and not the OTC.
Oh, it's yeah, sorry, good till cancel on that. Yeah, let me just re-enter that one again. So if we were looking at this, okay, it's saying get us in tomorrow, and we would do buy with stop. So you would change this to good till cancel. That would still be a day so you can get triggered in tomorrow. And then you would move your trail stop. You would do this and make it a trail stop. And then change it to whatever dollar amount you want to trail it by. So we said if we did $3, right? And then you would change whatever your order numbers are, you know, 10 shares or whatever, match the numbers on the sell side, and then confirm and send. So now your order would say you're trailing it by $3. So you get in at 260. If it goes up to 263, and let's look at this here. Why do you keep, I hate after hours stuff. It drives me crazy. So if, let's say, for example, we got in at 260 tomorrow, and then the stock price gets up to 263.
Okay.
right? Within a few, throughout the day, at some point it gets to 263. It then would move your trail stop to 260 because you told it by $3, right? If the stock price goes to 266, then now your new stop loss goes to 263. If it goes to 269, your new trailing stop loss is 263. So it's trailing it by $3. So you could do that as well.
Yeah, I like that.
But yes, but then you have to you almost have to learn the behavior and how much daily movement it does. Because if you make the trailing stop too tight, then it will literally trigger you out only for it to go back up again, right? So you almost have to look at the ATR, look at intraday and see what that range is, how much it moves intraday, and then figure out how much you want to trail it by. But that's something that I would normally do once I've gotten into the trade and it's kind of starting to linger around or dance around, kind of how CRM did for those couple of days. So that would have been one that I would have done that on. Or even with FedEx now, because let's say if I didn't get out of FedEx, let's say if we decided as a group last week that, hey, we got to 275, but we think this thing can still keep going, especially because it did high base, right? It got to 275 and then it kind of sat here for a few days and then broke out again, right? So this was our breakout candle. So we could have said, hey, let's put a trailing stop loss. This one also ironically moves about $7 a day. CRM and FedEx are literally identical. Moves about $7 a day. So we could have said, okay, hey, let's give this one a little bit more room. Let's give it a $5 trail stop or whatever, and then just keep trailing it. So now it would have been moving up in increments of 5. So at some point today, this is where you'd have gotten triggered out because it had an $11 range. So if I put my cursor back up here, look at the R when I put my cursor on today's candle. So the range for today was $11.66. So if I go intraday and look at this, and let's go 15-minute candle and just look at today's movement, right? That candle range itself was $3. So that would not have taken you out. That was a $3. That was a $1 candle. That was a 2.5. Then it kind of high based at 291, and then we started seeing that sell off, right? So once it came back down and started selling off, the moment it would have been down over $5, then it would have triggered you out of the trade. So you'd have been triggered out at you would have been triggered out at 280, 86 or whatever from the high. So you'd have been taken out of the trade somewhere around here once it got down below $5. And locked in a few more dollars worth of profits because we took profit at 275, and you'd have taken profit at 285. So $10 more profit if you did a trail stop versus just leaving it at an identified price point. So that's how you just manage trades though. But the initial getting into the trade, we still do that stop entry target, right? To identify whether our risk to reward ratio is good, whether we want to take on the trade, whether we're comfortable with how much we're risking versus how much we're going to make. And then once you're triggered into the trade, you can always adjust your stop loss and you can always adjust your target based on what the stock is doing, right? If you think it's got momentum and it's gaining traction and seeing more volume and it's going up, you can always adjust your target, move the target price up a little bit, and then move your stop along with it or trail it. So you do have a couple of choices with that, right? And then with DraftKings, and this is what we always talking about, wait for price confirmation. If you guys recall, this was the candle that we were looking at with the DraftKings, because that's where we drew it right there. Do you guys remember that, right? And we said, hey, here's DraftKings pattern, right? It's giving us this higher high, higher low, higher high, higher low. We saw that it did have this 1, 2, 3 day pullback, and it pulled back right to this 20-day moving average. So this candle right here, this is what we were analyzing DraftKings off of. And we said, if it finds this as support, now remember, we have support is only identified what? Once the stock price starts to go back up again, right? So we said that if this is the identified support, based on it falling right to the 20-day moving average, we saw volume down here coming in, right? We saw the increase in volume coming in as it found that support level that we were going to get in it if it got above what? This candle's day high with the ATR, right? So I think our entry was like at 56 something, if you guys recall, right? Let's see if we still have our numbers here. No, we don't
Yeah,
have
we
these.
were gonna get in at 55.32.
55, yeah, right here, 55.32. This is what we were going to get in at 55.32. So we now look at this, and this is why we always say wait for confirmation. Don't try to jump the gun because you just don't know what the market's going to give you, right? So the next day, did we get triggered into the trade? This is the next day, right? And we were going to get in if it got to 55.32, right? It never got to 55.32 because this is where 55.32 is right here, right? And right there. That's our 55.32. So it never got here because this candlestick here, you guys can see it opened and sold off, right? So clearly this was not our what we thought was going to be our support level because it continued to go below this candlestick right here for this particular trade. So we had continuation to the downside. And then the next day, were we in the trade? No. So therefore, do we have any money at risk in the market? No, because it never got to where we identified as our entry point because we wanted to see confirmation, right? You never want to be the first person to jump off the cliff. You want to see that somebody else is jumping off first, that they landed safely, then we get in. So we want to see that Wall Street is coming in and pushing this price point up. And clearly the bears came in and pulled the price point down. So here we go, the second day, the third day, we're not in the trade, so therefore we're not losing our minds, and DraftKings is still doing what? It's still selling off. So now we cleared the 20, and now here we are at the 200, and now we're gonna see whether this is gonna be that new. But this is so much of a sell-off that it cleared that lower low that we had, that first pivot right here, right? So it's kind of sort of broken the trend. If you guys see this trend right here, we have the higher high, higher low, right? Higher high, higher low. What happened to my little pen so I can draw? Come here.
Hmm.
Disappeared on me. Yeah.
Where is this mythical 200 I'm supposed to be looking at?
Mythical 200.
Yes.
See these different lines? Let me draw these for you. Dun, dun, dun. See
Like
these
it's on
lines.
the chart.
So these are what we call moving averages, okay? And they track the price of the stock based on certain number of days, right? So this is a 200-day moving average. This is a 20-day moving average. This is a 50-day moving average, okay? So traders, investors, algos, all,
50 or 15.
we all have 50. So we track, I use the 9, I use the 20, I use a 50, and I use a 200. In most cases, I really look at these three. When I'm looking at the 200 here, it's when I'm looking for like if I'm looking like long term, like I'm looking at a weekly or something like that to like really look to see how far back it's going. So when you're talking about swing trading, and now let me clear all of this stuff so that we can talk about, let's clear these drawing sets here. Yes, clear all drawing sets. All right, so when we're talking about trends and patterns, right? With the DraftKings, and now let me actually take away the moving averages so you guys can just see it perfectly clear. Your clean chart. Oh, come on. Studies. Load. Clean. Okay, so I've taken all the moving averages, so now just look at the picture. Okay. we were looking, oopsie, zoom out. So DraftKings for a while, all it did was do what? Was channel sideways.
Mhm.
And then it broke out of a resistance zone, right? So it channeled sideways for a while. And then it finally did what? It finally broke out. And so what we were looking with DraftKings is that we would see, right, this higher high, higher low, right? But if you see here that this higher low, when it came back down, we were looking at this here as going to be our new support so that it can continue with that higher high, higher low, higher high, higher low kind of trend. But it didn't find that support level. It actually broke that support level, came back to an old what? An old support level there. And you can see it tested it for one day and still cleared below that one there. So it's kind of almost broken the pattern. So it's no longer giving us that uptrend that we were used to seeing after it broke the what? After it broke this resistance level right here. We wanted to see that continuation pattern of higher highs, higher lows, higher high, higher lows. It did not give us that. So now can we look at DraftKings and say, hey, we want to still use that swing trade as for it? No, not until it starts to do what? Set up again and give us another set of higher highs, higher lows, higher highs, higher lows, and then we can consider it again. But for now, it's broken that trend. That trend is no longer there. Remember, we talked about the trend is your friend until it's not, right? So we're not going to try to force a trade into DraftKings based on what we saw from that one candlestick that we looked at on this day. Oh, no, clear all drawings. We were looking at it here on this candlestick and saying, okay, is this that support level that we were looking for? Because of what? Of past behavior, right? When it broke out of this channel right here, right, you can see that higher high, higher low, and we didn't get that continuation. So now it's a broken trend. We're done with it. And if you actually now zoom in a little bit, I haven't taught you guys this pattern yet. You will learn it as you guys get further into technical analysis, but I want you guys to picture a head
and shoulders.
Who said that?
Jake talked about it on
Oh,
Wednesday.
good. Okay. So there's your shoulder, there's your head, and there's your shoulder. It broke the neckline. So whenever you see this pattern here and it breaks the neckline, that means it's continuing in a downtrend and it's no longer in this uptrend that it was in before. Because it double bottomed here. That's the first double bottom here, bottom here. So that's a double bottom support level here. It's testing that, and then it finally broke it.
So
when we see that, it's an indication that this trend that it was giving us before is no longer our friend, right? Now it's giving us a reversal what? A reversal trend where it's going down. So we either have to just put it on a watch list and wait for it to do what? To form either stay sideways for a while and then break out again and continue in that uptrend. Or we start trading it bearish. We just have to wait and see.
Using your insurance products.
Using put options or shorting the stock. We can use put options or we can short the stock, either way. And so what we're looking to see, like if I was going to go the opposite direction now, what I want to see is I'm going to identify this now as my new ceiling, right? So remember old floors and new ceiling type stuff, right? So because this was the floor before, now because the stock price is below it, now this is the ceiling. It was a floor before when the price was above it. But now that the price is below it, now it's the ceiling. So what you want to do is you want to see it test to see if it will go above that ceiling again. If it hits its head on the ceiling and comes back down, there's your entry to trade it on the downside. So you can play these either direction, up, down, sideways. Doesn't matter to me. I'll find a trade for it. I'm not emotional to one direction when it comes to stocks, right? It's wherever the opportunity shows itself. So with DraftKings, we were looking at it as a potential uptrend, but it's no longer that. So I could always keep it in my watch list, but now I'm looking at it, okay, is this going to be a potential bearish trade now, as opposed to it being a bullish trade where we were looking at it before, because it's no longer in that trend that we were looking at before, and we were looking at it to enter into the trade. But the point is, we never got into the trade because it never triggered above our entry point. Therefore, all of this stuff here, we have nothing to worry about because we were never in the trade in the first place. But whenever you try to front line and jump the gate before you get that confirmation, sometimes you might get it and it actually goes up, but in most cases, you don't get that confirmation. This is what ends up happening. And then you end up losing money that you should not have lost in the first place because you never let it trigger into the price point that you said you were going to let it trigger into in the first place. Make sense? So always wait for confirmation, position size, and then always wait for confirmation. Be patient with the trade. Don't try to force it. Kind of like football, whenever the team's running behind and then they try to throw the ball and they get an interception or fumble the ball or something, and they're doing something stupid like my Redskins. We're not going to talk about that right now.
Or the Ravens. The Ravens almost lost to the Eagles. It was a good football weekend.
I know, such a bizarre weekend with football. But anyway, so those are our 3 trades. And is Derek here? We're not going to look at AT&T because Derek is not here, but that's his favorite company to bring up. But
it was also the advice of Jake to get out of it.
And you can see why. Right? So look at where it was, look at where we were. And if you guys remember, we talked about, but AT&T is not a trade. Now, DraftKings, which we never got into, was a potential trade that never triggered. So we didn't have any money lost in the trade because we never got triggered into it. CRM was a trade that we got triggered into, and it did go up, but then it came back down and we got stopped out right at the same place we got in. So therefore we had no loss in the trade. FedEx was a trade. So FedEx, DraftKings, and CRM, those were trades. AT&T, we were looking at as an investment, right? So we were not going to be bothered by having a stop loss or any of that stuff. We were just going to do what? Rent out our AT&T house, remember? Mm-hmm. So with our AT&T, all we did was buy the shares. And then after we bought the shares, we went and did what? And sold a call to bring in cash flow. And we did that. And where are we now? So we got it. We brought in $50 of cash flow. If you guys recall, right? We sold it for 50 cents. And because each contract controls 100 shares, 50 cents multiplied by 100, we brought in $50 for our rental this month. We still have 18 days left in our rental. So far, we've collected $38 of our $50. We still have 12 to go. Does that make sense? So once this contract expires in 18 days, I'm going to go do what? I'm going to go sell another one and collect more premium. Now, because AT&T has been going down since we bought it, you guys can clearly see that in the chart, right? But it's an investment. Like we said with the house, if real estate prices change and the value of a home goes down, right? 1%, 2%, 3%, whatever, does the investor put a for sale sign whenever there's a slight market adjustment in market price? No. Why? Because they're still collecting what? Rent. So with our AT&T house, so this is our tenant, this is our house. We paid $28.49 for our house. The value of our house has gone down a little bit since we bought it. Now it's worth $26.92. So our house value has gone down thus far $157 total. But we brought in $50 of rent. So have we really lost $150 or have we only lost $103, $107?
107.
107. Why? Because we brought in rent. And now next month, and this is the difference between the average investor who just buys shares and sits on shares hoping for appreciation versus the what? The educated investor who knows how to do covered calls and is now bringing in an extra $50 premium, give or take, every month to mitigate what? The cost of the actual shares, and for when you have down months where the value of your asset goes down. And then on top of that, we said that we're not going to be too concerned with AT&T in terms of buying insurance for a house in case the hurricane comes until it breaks $26. That's where we all agreed as a group that we were going to go buy our put option so that if AT&T continues to go further down, now we're going to go buy our put option insurance and say, hey, insure my house from $26 down, because if the house burns down and it goes from 26 to 0, I want to make sure I cover my assets. But for now, we just have the asset and the tenant, no protection yet, because this was a long-term investment. The mindset with AT&T, we were talking about it being that long-term investment. If you've got $2,000 in the bank, you're doing nothing with it, you're not getting any interest from it, you can at least invest in AT&T and pick up the what, 7, whatever it was in dividend, 7% payout in dividend, right? 7% in dividend, at least beat inflation with that, with AT&T, right? So we said that's why we were looking at AT&T as more of a long-term investment, just because of the dividend payout. But then now we're also bringing in cash flow every single month with the covered call. So the AT&T mindset is different from our FedEx, CRM, and DraftKings, because those three were trades. AT&T is an investment. You guys see how that mindset shifts when I'm looking at this, at the two?
Mhm.
So with AT&T, I'm not concerned with it falling because I have a plan with AT&T. If it continues to drop, my next plan is not to exit. I'm not going to sell my house just because it dropped in value a few dollars, right? I'm going to implement my option to buy insurance from the market and protect my shares of AT&T if they ever go below $26, because that's where I felt we agreed as a class, okay, that's a known support zone. If it goes, that's the lowest I think it's ever been. We went back and looked back at the last from the pandemic where it got to the low of, and we said, okay, if it does test those previous lows, then let's put in some insurance. So that's it. That's how you go about your daily routine. And then you find a new trade to trade, and then you just move on. It takes longer for me to explain everything than it does to actually do it, right? Analyzing AT&T and then going back to see what happened to your FedEx trade, CRM trade, and DraftKings trades. Once, the more you do this, the more it will start to, to be familiar with you, and it'll be easy for you to analyze those trades as you go. And then you scan for new trades. So now here comes my idea and my theory with the home builders, right? So now what new trade we want to put on for today? Because the whole idea about trading and investing is you go through your daily routine, make your adjustments, and then find a good trade. Put it on and then move on, right? So if we think about what we talked about with the home builders and the potential for that area seeing strength because of low interest rates and people needing space and because they have to work from home or whatever, then you start thinking about your home builders, right? So if I just list off a couple, you guys look at the charts and tell me what the trend is. And I bet you it will not take you less than a second to tell me what the trend is. So the first one is DHI. That's DR Horton. What's the trend?
Up.
Lennar Homes.
Up.
KB Homes.
What about Toll Brothers?
Oops, not KBL and Toll. How about Toll?
Sideways.
Sideways now for the last few weeks, but overall, if we go
Yeah,
back from the
overall.
pandemic days,
Bullish.
this is pandemic. This is March 13th. You could have picked up Toll Brothers for $13. And now it's at 50. Let's go NVR. What's a popular builder in your areas, guys?
GL Homes. I don't
Which
know
one?
if the GL Homes. I don't know if the public though.
I don't know if they're publicly traded, but I know you guys have Pulte Group.
Colton, yeah.
So
How do
you
you
guys
know
can
all
see
these
that
things?
the home builders have done really, really well. But now the question always is, well, which one do I pick? So I'm gonna test your guys' knowledge. If you don't know which one to pick, what could you always do in lieu of picking an actual stock?
The
Buy an actual house.
mutual
No.
fund thing, the
The
EFT.
red
Not the
ETF.
mutual fund. That's the one we don't want to do. What's the other one?
ETF.
Yeah.
There you go, ETF, yay. So there are 2 ETFs you can use to track home builders. Now, when we do ETFs, sometimes they'll lump in home builders and then also do construction. So you'll see like a Home Depot in that ETF or a Lowe's in that ETF and whatnot, but it's gonna primarily have some home builders. So one of them is XHB. So there's your Spiders Home Builders ETF. Does it look familiar? Does it look like all the other individual stocks we just looked at?
Yes.
That's DHI. Look at DHI and look at the ETF. They almost look similar, right? The other ETF you can look at is ITB. So if you're not sure as to which one to pick, you can always go to Google, because Google has all the answers, right? And we can type in ITB holdings, because I want to know which stocks are in this ETF, right? Because it just, ITB doesn't tell me anything. It just tells me it's an ETF for home builders, but I want to know exactly what's in them, right? So we can go to like Yahoo Finance right here, right? And now it's going to give me the ETF ITB. And if I go to the holdings tab, I can go down and see, okay, obviously it's in consumer cyclical. It has some industrials, but these are the top 10 holdings in this ETF. Oh, wow. It has DHR, it has Lennar, it has NVR, it has Pulte, it has Lowe's, it has Sherwin-Williams. Hello, we got to paint. Home Depot, Top Build Group. I don't know who that is. Masco and Toll Brothers. So this one has a lot of home builders, right? And then some, and then Lowe's and Home Depot and Sherwin-Williams. If you want to compare ITB to the other ETF, which is XHB, now we can type that in and look at that one's top 10 holdings and compare and say, okay, which of the two do I feel comfortable investing in? If you do not feel comfortable enough investing in an individual builder, because what are the cons for investing in individual stocks? We have to deal with something that happens every quarter, earnings, right? And then just just the company news itself, right? Like if the CEO comes out in handcuffs or whatever, that could move the price of the individual stock, right? So you could, we could all go and pick out different different home builders and they'll move together, right? But if one of them has news outside of what it reports in earnings, or something happens with the CEO or their books or something, that could drive the price of the stock the opposite direction while the others keep going up. So when you're not sure, you can always go with the ETF. If you don't know which stock to pick, you can always go with the ETF that has a basket of all of them. Now, if we're looking at XHB, this one's holdings is a little bit more to industrials. It still has obviously some home builders, but it also has some industrials as well. Now we've got Whirlpool, right? Appliance maker. We still have a home builder, another home builder. Trex, I believe, is a home builder. Or no, they make help me out here. The
Don't
thing
they
that
make
you wrap the house
insulation?
around with.
There's insulation.
Insulation and goodness gracious, why am I losing all my
Decking.
terminology?
Deck.
It will come to me like at 2:00 in the morning, and I will have to tend it out to the group and let you know this is what I was talking about. But Carrier, this is air conditioning, whatever, like home. All the stuff that you need inside your house, so like your water heater and your air conditioning units and stuff like that, right?
Yeah.
Compost decking.
Thank you.
Compost decking? Oh,
That's not what I was thinking,
The
but
big
it's
deck company.
oh,
and then you have Lowe's. So this one still has Lowe's, right? And it also has Home Depot. And then you can look at the percentages and see where, what it has. So this is evenly distributed, where the top 10 holdings have about the same percentages in there. But this one does not have as many home builders as the other one did. So if you were really trying to do the home builder play, and you're seeing that this has D.R. Horton, Lennar, Pulte, I think that's 3 home builders, compared to ITB, which had DHR, Lennar, NVR, Pulte, and Toll Brothers, right? So this one has 3 more than the other one does, but then look at where it's heavily weighted on. So this ETF is heavily weighted on what? On DHR and Lennar. It's got 14% in DHR, 12% in Lennar, 8% NVR, and you can see all the numbers there. So these are leaning more on others than the other ETF. Or the other ETF, the top 10 holdings were all what? They were all evenly distributed at around 4%. You guys see that? So when you're now, even when you're looking at the ETF, you can say, okay, do I want to be heavily weighted in one particular stock more than the other? Do I want to be evenly weighted? So now you can decide, okay, which one do I want to go with? But now you can make a decision and say, all right, if I can't go in there and actually individually pick out a stock, can I just do the ETF, right? So if we looked at, okay, if we look at all and we're like, okay, I'm confused, I don't know which one to pick. Do I do DHR for a long-term play, long-term investment? Remember, it's all about investment, right? Because we're thinking about this long-term. This is not a trade. We're going based off of the news of and the overall theory that if most Americans are going to remain at home, the Fed does not plan on doing anything with interest rates for the next 2 years. 3 now, 2 now, but it's 2023. So will this home builder construction still play out, in a year from now, 2 years from now? So this is not a quick, I want to be in it for 7 days and then I'm out. You want to capture the whole cycle, right? Now we're not talking about an individual like pivot. When you're talking about investing, now we're talking about the whole cycle. We're going to be in it for quite some time. So now you have to think about, okay, which company do I like, blah, blah, blah. If you don't like the individual companies, if you can't pick from one individual company for one reason or another, then you can always go the ETF route. And those are your 2 choices for your ETF. HB and ITB. So for homework, I will let you guys decide on which individual stock you might, if you guys are going to go individual stock, or if you went ETF. So think about that play. If you were going to hold a home builder for the next year or 2, which home builder would it be? And I'm going to send you guys all the different home builders that are publicly traded and the 2 ETFs. And then let's discuss on Wednesday your personal preference. Did you choose to go individual company with a home builder, or did you go ETF, and then which one? And then we can look into putting on a trade for it and doing the same thing, covered call, renting it out every single month, and then thinking about doing a put option if it ever was to break support. Kind of same scenario with AT&T, because now we're putting on that that long-term investment mentality. Cool.
Oh,
Any
excellent.
questions?
Of course, Jacob walks away right when we're finished.
Call him out, Jacob. He can't hear us. We're on mute.
No, that
But
just means
yeah,
we can't hear
any
him.
questions about any questions about how we went back and looked at FedEx, CRM, DraftKings, AT&T, and the different and the hats that we wore when we're looking at AT&T versus the trades, and then what the homework assignment is in terms of the home builders. Well, good. We all know what we're doing.
No.
Just analyze. I don't want you guys to put the trade on. I just want you guys to think of the theory, right? So I gave you guys the link to the article in the chat earlier, right? So let me put in the different home builders. And then you guys can, oh, I meant to do all of them. So let's do that again. DHI, LEN, NVR, who are the ones? PHM, TOL, KBH for KB Homes, DHI, LEN. Okay, I gave you all of them. So those are your stocks. And then your ITB and your XHB are your ETFs.
You can order, honey.
Pick from.
Yeah, but remember you sharing us Chinese.
And then we will discuss.
And I gave the opportunity. You guys didn't do it.
I said 2 hours.
And then what you can, sorry guys, that was muted.
That was good.
Over there.
Opportunities passed, honey. If you don't take advantage of when it's there, what's going to happen later? Just like this class. I'm muted.
Not anymore. Anyway, Jacob, any last words so we can let everyone head off for their rest of their lovely Monday evening?
So yes, we're going through some really cool growth things at Investor Party, which is why you guys haven't seen me as much, because it's been damn busy. We've been doing a lot of branding and a lot of building with different affiliates to make things happen. So things that we are looking at doing coming up is we want to see you guys do a certain amount of paper trades, so you know what you're doing before you go live, because none of this matters if you don't actually start doing something with it. So are Kathy, Jay, and Bo, I know you guys are on here the most frequently, are you guys actually paper trading?
I'm
Not
trying.
at the moment.
So then you're wasting the opportunities that you have in front of you.
Yeah. I've done a couple, but they, I don't know how to, I feel inept in reading the Thinkorswim and getting around in Thinkorswim. It's just like, I try to click on the things that Emily clicks on and it doesn't show up for me, and it's like you make a trade and how to analyze the trade and all this stuff. And I'm like, where's that button at? I don't know.
If you ever get stuck, I'm literally, if it's during, pretty much, I'm up until 2 o'clock in the morning. So it doesn't really matter what time you're looking at it.
Yeah.
Whatever you're looking at it, if you just want to shoot me a text, or if you have any questions, just let me know. I am more than happy to jump on Zoom with you individually and just kind of go through it. If you're ever
Okay.
stuck, you can just give me a call.
So that's actually one thing I want to make sure, and thank you for being honest with that, Kathy. That really does help, because what we're trying to get, and this is our beta test for Stock Market Survivor, and what we're looking for is feedback on how we can actually get you guys to improve. Things like not being sure how to work Thinkorswim helps, and it helps Emily get direction of where a particular group has to go. The success of your paper trades indicate how much you're understanding, so we know what we need to focus on, what skills we want to develop, where you guys are excelling at and where you're weak. But if you're not doing the trades, if you're not putting into practice what you're learning, you're wasting everyone's time here. I'm putting it very clearly, because I want you guys to do it. You don't need permission to play Monopoly Money.
Right, go blow up the account, like mess it all up.
Yeah, go try to break Thinkorswim. Like, go try to break it, right?
But my
Just
real
make sure
money
it's the
in
paper money
FedEx.
one. Make
I
sure it's
want
the paper money one before you do
I
that.
want to do real money in FedEx, you know, I just want to throw it all in there and make that.
But that's the
I
point.
made you guys do Scouts Honor and Promise, right? We're paper trading first until you become a very, like, until you can put the trade on with your eyes closed with the in Thinkorswim, there is nothing you're doing in live money.
And that's what we're trying to get. So Emily and I have been trying to see where everybody is, because before you guys go live, and what I'm going to require an investor party is that you guys have done a certain amount of paper trades. So not that you've done a certain amount of success, but because you will feel comfortable going and putting some money at that point.
And
It's
it,
kind
and,
of
it, and really and it really helps us evaluate, you know, like kind of like how we kind of went back and did that and look back at our trades with FedEx and Home Depot. It helps us evaluate to see how you managed your trade. Did you stick with the original stop entry target, or did you adjust and you can start to see your trend and your behavior and how you actually react to the trade and to money as the stock price is going up or down. And that's how you start to measure how you're doing based on us having something to go back and track on. It's not to sit there and say, oh my God, you lost all this money. No, it's to help understand where you might need help with, or whether you're too conservative, whether you need to be a little bit more aggressive, or whatever the case might be. But if we don't have the paper trades to practice and work off, it doesn't have to be what we talk about in class here. Like if you're in the markets and you just hear of something and you see a chart that you like, that, you know, it's from your own personal watch list, go ahead and put the trade on. Like, and we've learned about the two different patterns that we're looking for. It's either the high base where you're looking for that breakout. It's been sitting at a certain price point and then it breaks out, or it gives you that stair step where it gives you the higher high, higher low, kind of like how DraftKings did. And then it's continuing in that same momentum to the upside. So if you see any of those patterns, just like literally just put on the trades, and the more you have on, the more we can go back and analyze them. And we have that class where we did how to put the order entry in and save it so that you don't have to keep doing it over and over and over again. Once you have that template saved with the order entry, it's like literally right click and buy, and you use that template that we saved together in class to put that same stock trade on.
So, but once you put this trade on and you don't get in the trade, then there's no history of your transaction.
Right. If the trade never triggered me, yeah. If the stock price went down the next day and it never reached where your entry price was, then you were never in the trade. Therefore, you had nothing to look at. Right.
Okay.
So all you can do.
So that's where your notes, is that where you're looking at your journals? You're like, you have to keep a separate paper journal because.
No, not really, because if the trade never worked, if the trade never got triggered, that means our analysis of how of where we figured our support would be and where our entry would be, the stock just never got there. Right. So we never put any money at risk. So there's really nothing to be concerned about with that particular trade, other than looking at it and putting it in a watch list to see whether it takes another day or two before it gets there. So part of your daily routine with trades that don't go in is to look and see, is that trend still in play, where maybe it just didn't get to that entry point today, but it might get there tomorrow. So can you re-enter the trade again? But with DraftKings, because it kept going down, there's no need to even to bother with DraftKings at this point, because it never even tried to find support of where we thought support was going to be. It just started going down every single day thereafter. But had it stayed at that support level the next day, then maybe it would have triggered the following day, and then we could have just re-entered the trade again. But because it just never did that, no point of worrying about it.
Mm-hmm.
So what I want you guys to understand is that what we want you guys to do in the daily routine that she's telling you to do, that's not just Monday and Wednesday nights. That's why it's called the daily routine. You guys should have that down by now. And you should be doing it, because you won't know how much you really know. You won't be comfortable and you won't understand what you've actually been given until you test it. And we're giving this to you with training wheels and a feather bed and like saran wrap. Like, you are safe right now, but you're sitting on the sidelines. And that's what I want to know. How do we get you guys to actually do something? That's what I need to find out from you guys. What will it take? Frankly, I think it's because we offer it for free. That's usually what it is. And yeah, Emily and I spent 40 grand to get started, and I've spent over $150,000 now to get my business to where it is. So I have to make it work. Emily, I know what she spent when she got started. It was also several tens of thousands of dollars. It's up to her to tell you, but I also know how much she's put in after the fact. So that's why we're doing it. When people get stuff for free, they typically sit on their assets. But why? Like, why aren't you doing it? You guys wanted this. You show up every week. Why aren't you getting in the game? Tell me.
We're paralyzed, we're pushing the button.
Oh my
Yeah. Ding, ding, ding. Yay. Thank you for being honest. Appreciate that.
Now, I think the best way for me to solve that, now I'm not even set up yet. I mean, I have the account, but I know my dashboard isn't set up right, is maybe if we share our screen, you know, in the Zoom call, and we go through the whole thing. We're putting in the markers and everything and deciding if that's, you know, and going through and making the actual paper trade. While you watch us do it. And each one of us do a trade that way so that we're handheld.
Volunteers and Jay and Kathy. Kathy and Jay were the only two volunteers that volunteers to do that. So I needed more volunteers.
Yeah,
Well,
I gotta start looking at the video. But I think, am I, Jay, do you feel like that? Are you making any paper trades?
I am making paper trades. Can you hear me?
Yeah.
I'm on my little, yeah. I am making paper trades. So I don't know what's wrong with y'all.
Okay.
No, just kidding, just kidding. No, I'm spending more time. I need more time personally. I balancing work and school and some other stuff. I'm trying to learn more about the different companies that I want to get into. So I can do more. I still have like quite a bit of money that I want to use on my paper money. So
that's one thing I want you to really hear yourself say, because I don't think we've attacked limiting beliefs enough. We've been focusing too much on technical analysis and learning how to read stuff, not enough on taking action. You're not going to know everything you need to know. Let me put it this way. You don't need to know as much as you think you need to know in order to start making money. Because you're going to start seeing results as you start playing. And from that, it's going to lead you in directions that educate you even beyond what you're learning here. You'll click on a news article that gives you something. Siri and Alexa know everything. Alexa, cancel. They know everything. So as you go into this, it'll start showing you articles on your news feeds that will inform your decisions on what you're doing. So all this bullshit, and I'm calling you guys out. This is what I do in Real Estate Survivor too. Do I not? All this limiting nonsense. What she's told you guys, it's a template. You hit right click and buy. How do you need more time to do this while you're going to school and everything else? Because let me tell you, I'm going to be very, very clear with you. When my ex had a heart attack at 39 years old, the same year that my boss committed suicide and my studio closed, and I had nothing to do but worry what the hell was going to happen, because that was 2016, exactly 4 years ago, the week after the election, I found myself in a ballroom spending a ton of money to learn how to save, to cover my assets, because I had enough of a beating and I did not know what was coming down with this administration. But I'm so glad I got my ass in gear. And right now, you're paralyzed by hitting a button in one of the biggest economic booms our country has, the biggest economic boom we have ever seen. When are you gonna get in the game, guys? You literally have mentors, coaches, and a community right now. What other bullshit are you believing? This can be automated. I'm not buying it. But sometimes you need someone to come in and say, knock it off and get in the game. Kathy, knock it off and get in the game, Jay.
Hey.
I'm not saying it to be mean. I'm saying it because it's true, right? Because at this point, you guys need to understand what your tolerance is because, to be clear, all of you are in different places in life, right? Jay has a few more years in which to learn and make mistakes than Kathy does. Her portfolio has to look different because of her stage in life. Bo is going to be different because of his mentality, his life experience than Emily's. But until you start testing your foundation, which you guys have gotten, you won't know what house to build. I go instantly to real estate analogies. Is what I do. So you want to try, guys. If you have one class left, let me rephrase that. You've got one free class left with Emily, who can be here to help you guys and get you guys moving, right? And then we're going to take time to like revamp and see what we like, what we're going to do, and how to get people doing something, because that's the point. And we're going to work all that out. And we do want to do an options trading class, but there's what I'm going to have done, and Emily and I discussed, is that you have to have a certain number of paper trades accomplished to qualify. So in order to continue to learn, you've got to take action. That's the difference. If you get something for free, and this is not just you guys, I'm saying in general, because look how many people have dropped off. You guys see that?
Yeah.
They got something free, they don't value it. So in order to go into options, you're gonna have to do a minimum number of paper trades. And it's not 5, right? So you've got to get in the game. So if you guys want more time, Emily wants to see that you're taking the knowledge that she's giving you guys, that she's volunteering her time 2 nights a week for 2 months. She wants to see that you're applying it and that you value her investment in you. And the way to show us is not necessarily by success or failure, is by getting in the game. You're allowed to lose money. It's fake.
And it's going to happen.
It's gonna happen. Real estate stocks is gonna happen. So just let it happen.
And that's why we have, what's the thing you said you need to have? Risk what? Position sizing. Position sizing helps prevent those losses, but you are going to suffer. Yes, you will.
And you can decide, do you like your position size to be big or small? I've got my preferences. What are yours? Anyway, so I want to see this. I want to see what in the Real Estate Survivor, I have them do what are called KPIs, or key performance indicators. We try to see how many calls they're making a week, how many deals they're putting in a week, how many offers are accepted, contracts closed. Like, we know the metrics, and that's where we're learning and we're growing. You guys, the good thing about what you're doing here with your journal, that spells it out for you. So you've got one more class. Emily has been amazing for this. I love you so much. Thank you for doing this for us and with us. And we're going to help this grow. We just got to figure out how. But let's all, and I'm going to be included in this. Let's go ahead and show Emily that we actually give a damn. Open our accounts, do some paper trades. You have 48 hours to actually do something to show where you aren't understanding. And then we come back on Wednesday, 8 o'clock. We're going to share our findings together. Emily's going to give a recap and help with everything else, and we will have an idea of what we want to do next. But we need to know from you guys, and thank you all for being here so consistently. Kathy, you're MVP, girl. Like, you've been to almost all of them. Way to go, honey. Well done. Jay goes back, the couple he's missed, he's gone back and actually watched the episodes. Yay, I know. I have that ability to see who actually does that. So, yeah, I'm really good behind the scenes. I'm also really good on camera, but it depends on what the film's for. So the thing is, I want you guys to actually give feedback. So let's play this up. Let's see where this goes so we can determine if we're ready to do options trading or if we need to revamp everything from this, which Emily and I are going to talk about, but we would love your feedback. So have it ready for us on Wednesday. And that's going to be awesome. Thank you guys for being a part of this. It's been so great. Like, I know I've been in and out because I'm running the rest of the show, but thank you for being here and being a part of our community.
All right.
All right.
Thank you.
All right. Anything else, Bill?
I don't think that's it. See you guys on Wednesday.
All righty, guys. Well, good night. Don't forget your homework.
Good night.
Bye, everyone. Good night.